Good morning. Appreciate you taking some time out to go through some fun financial stuff. Today I'm going to be talking about the new changes to the tax law due to the recent, emergency coronavirus number 3 bill. I don't even know what the name of it is anymore. I can't keep up. So it's the third stimulus, but it's had a lot of changes to not only the stimulus, but to the tax law as well. So it affects a lot of different things. So be a little bit meaty, a little bit boring, but it's some information that you might find interesting. So I'm just going to jump right into the presentation and we'll get rolling. So again, this is the third iteration. It was a $1.9 trillion bill that went through. And it also just snuck through the Senate by one vote. So it wasn't like a resounding bipartisan effort by any means. But we'll get into it. Now, this isn't part of the bill, but this is something that the IRS finally came out. They've been having pressure to extend the deadline because of all the changes that have been made. So the IRS has, in fact, extended your tax filing deadline to May 17th now. So rather than the usual April 15th, we're going to go to May 17th. They didn't decide to go to July like what happened last year. They said that they'd go for 1 month more. The good news is if you are going to owe on your taxes, that is also extended until May 17th. So you won't have a penalty if you don't send the IRS what you owe them by April 15th. So it gives you an extra month to pay. Also extends it for S corporations. So for business owners out there, if you file 1120S, that extension has applied for you as well. It also applies to IRAs and HSA contributions. So as you know, you could always make a contribution up to April 15th for the previous year. Well, that is also extended now till May. So we have a little bit of extra time. So what wasn't extended? Well, you can't, the extensions are still going to be 10/15, October 15th. So if you usually file an extension on your return because you're not ready to file it on April 15th, you're not getting an extra month on that. So that's going to be the same as it was before. Also, if you do quarterly payments, your first quarterly payment is still due in April. It is not extended to May. So if you're doing every 3 months, you're making a quarterly payment, the IRS still wants that in April, or it's going to be late. Okay, so stimulus part 3, as you've probably seen in the news, $1,400 per person. And what's a little bit different here, this includes dependents, but the dependent is a different definition now. This is a much more expanded definition for dependents. Before, it was dependents that were under age 17. So for the first 2 stimulus, it basically tracked what the child tax credit provided. Child tax credit cuts off right when a child hits 17. So they have to be 16 or younger. So the first 2 stimulus payments followed that rule. This one is saying, no, we're going to let basically any child that is a dependent of yours. So if your child is in college, could be 22 years old, but still dependent and in college, you get the stimulus for that child. It also works for people who are maybe claiming their parents, elderly family members. So if any dependent, regardless of age, now qualifies the taxpayer or married filing joint taxpayers for a stimulus payment for all dependents. So the next question, and I've gotten a million questions on this. This has been a really crazy tax year for us here. Just dealing with, we put a new system in place to help people who don't want to come in the office for COVID. So we're working on a couple different systems, and then we've got stimulus questions like crazy. We've got they extend unemployment, which I'll talk about here. So a lot of crazy things going on this year. It's been really nuts. So anyway, how do you determine if you're going to get the payment? That's the big question that we get. So it's still going to be based on your 2020 tax return. That's what it's intentionally going to be based on. What you need to understand about this third stimulus, it's actually a 2021 tax credit. So it's technically a normal tax credit. You get that when you file your tax return for that year. So being a 2021 tax credit, you really wouldn't get that tax credit until you file the spring of 2022. But they're going to pay it early. But clearly they don't have any idea what your 2021 income is going to be. So they have to figure out, well, how do we determine this? So the first thing they're going to look at is, did you file a 2020 tax return? If yes, that's what they're going to use. If no, they're still going to be doing 2019. Okay. If you have not filed your 2020 return, you're still working on that, your tax preparer hasn't done it, or you haven't figured out, the TurboTax, whatever. So they're going to base it on 2019. If your income, let's say for some reason your income was too high in 2019, so you're not getting the stimulus, but your income is lower in 2020, there's actually going to be a period, an additional payment determination date. So you can get the stimulus early. Now, if you don't do anything, remember, you get it on your 2021 tax return when you file in April or March of 2022. So you'll still get it, but you can get it quicker if it's based off your 2019 return and your 2019 adjusted gross income was much higher than it is in 2020. They're creating what they call an additional payment determination date. So it's 90 days after the 2020 calendar year filing deadline, or September 1st. So essentially, if you file and then by September 1st, the IRS is essentially going to know if you should have gotten the rebate or more rebate than what you did get, and they're going to send that to you. Okay, so basically they're being as lenient here as they can to get you the stimulus money. So if your 2019 income's too high and you haven't filed 2020, you can still get it once you file 2020 if your income's lower. If you don't do anything, you're going to get it when you file your 2021 tax return. Okay, so you're going to get this money if you're qualified for it. Okay, so this is just kind of a working graph. It's a little bit hard to see. I apologize for that. But it's saying, okay, the first step. If you're 2019 or 2020 AGI, whichever one's latest on file, if it's below the threshold, you're going to get the full amount from the IRS. Pretty easy, right? 2019 AGI, if it's below the threshold, it's above the lower threshold, but below the final phase out. So there's a phase out. You're going to get a pro rata amount from the IRS now. Or what will happen when you file your 2020, that's where that additional payment determination date will come in, and you'll get that. So that goes to checkpoint 2. It gets to, all right, you filed 2019, you're being phased out a little bit on it, or you're completely phased out on it. Okay, what happens next? Well, okay, it's your 2020 adjusted gross income is less than 2019. And if you filed before the additional payment determination date, again, if you qualify, you get the full amount. If there's an adjustment needed, the IRS will make that adjustment and get you the money. And then the final checkpoint, again, if you don't do anything, and let's say 2019, you had a great income, 2020, you had a great income, but 2021, you didn't. So for 2019 and 2020, you were phased out. If your 2021 income is low enough, you could get it then. Okay, so remember, it's a 2021 credit, but they're getting to you early. So what you need to do is focus on what's that phase out amount so that you can get the stimulus payment. The other big question I get a lot is, well, how am I going to get it? Is it come to my bank account? Well, if the IRS does have your bank information, if you've gotten a refund in the past and you put that on your tax return, that's where they'll send the money. If you didn't, then typically what they're going to do is send you one of these cards, these EIP cards. It's basically a credit card. You can use it just like a credit card, or you can take it to your bank and your bank can then take it from the card and put it into your bank account. Okay, so that's probably the biggest thing you need to know. The other thing you want to make sure you do is file a tax return, no matter what. All right, even if you don't have to file a tax return. Let's say in 2019 or 2020, you're a student, or you're just elderly and your income is below the standard deduction amount. So you don't have to file technically, and you don't file. Why file if you don't have to? Well, what you want to do now is you want to file. Okay. In fact, you probably want to file your 2020 return because that's going to get the stimulus going quicker. So you can get that. Again, if you don't file now, if you don't file for 2020 tax year, you'll get it in 2021, but you're going to have to file. Now, if your only income is Social Security, whether that's retirement or disability, or if your only income is military pay, you're going to get it automatically. You do not have to file your tax return. So if your only income is Social Security or military pay, which includes retirement pay, you don't have to worry about it. The other thing is, I've actually gotten questions on this. Somebody about back child support and a back tax lien wanted me to figure out, is he going to get his stimulus? I felt like saying, just pay your damn bills, pal. I mean, that's what you should be doing. Don't worry about if you're going to get this money, you should just pay your bills. But I didn't. So anyway, since this is not technically income, the stimulus is not income. It is exempt from garnishment. So if you owe back taxes, child support, or you're in default on a student loan, they're not going to pull that. They're not going to take that money. Now, if you've overdrawn a bank account, that when that money comes to that bank account, the bank's going to take whatever comes into that account. So you're not going to be protected from that. So if you owe for not paying your bills like you should, you're still going to get this. Now, if you want to know when you're going to get your payment or what your payment amount is going to be, the IRS does have a site set up, a page. If you go to irs.gov/coronavirus/get-my-payment, you can see the site right there. You can find out exactly, when you should expect it and the amount. So you just click on the Get My Payment button, and it'll give you, I think, the information you're going to need. Of course, this is all being thrown together pretty quickly, and it's being thrown together by the government. So I wouldn't expect perfection on this thing. So whatever you do, please don't call me and ask me. I've had too many of those calls. I'm begging you. All right. So other things that have been affected with the new bill that they just passed. The first thing that you'll see is unemployment is now not taxable up to a certain level. This has thrown us for a loop because we did some tax returns for people with unemployment. We've already submitted those. And then we had the state of Maryland up where we're at that basically then exempted. I mean, during the year. So we're already well in the year. People are filing the tax returns, and then they exempted it at the state level. So then we had to hold off, and we're probably going to have to do some amendments for people. And then shortly thereafter, the feds do it too. So the rule is they're not going to tax the first $10,200 of unemployment. Now, if you and your spouse and you file jointly, both filed for unemployment, that's going to be $20,400. That is going to be exempt from taxation on your unemployment. So if you think about it, with the standard deduction, you could have $24,000 of unemployment and $24,000 of other income, and you were not going to pay any tax whatsoever. So you could technically have about $48,000 of taxes for a married couple, or $24,000 for a single person, and not pay any income tax whatsoever. And again, the IRS system is not set up. That's one of the big reasons they extended to May 17th. They don't have everything done. They're working diligently to do that. So if you haven't filed and you do have unemployment, I definitely would hold off until the IRS is fully ready. If you've already filed, the IRS so far is saying do not do an amendment. They are going to create a new form or a schedule to exempt the unemployment. So you don't want to do it quite yet. So if you already filed and you're thinking you should get some money back, just hold off a little bit. You're better off doing it that way. Another thing that was affected by the new law is the child tax credit. So this one is very advantageous for many people. The old law, the 2020 law, was essentially $2,000 per child for ages 0 newborns to age 16. And we've always had a problem with child tax credit as a tax prep firm, because what happens is that if your child turns 17 at any time during the year, even December 31st, you lose the child tax credit. And it's a big credit. And, you would think they're 17, so they're still in the house. They're still your child. You're still providing all support for them, but yet you don't get that the money. So we always get people that get caught and they end up owing because they lose a child tax credit and then they blame us for it. But so it's always been a kind of a quirky rule, but that's how it's structured. And then, typically you get the money when you file your tax return. Just like I said, a normal tax credit, you don't get it until you file a tax return for that tax year. Now, what they're doing, it's a little bit tricky. It's really kind of a two-phase. So the current 2020 is in place. I'm going to jump ahead here because this is sort of tricky. So it is in place for people right now. The 2020, no matter what, is going to remain. The 2021 is sort of on top of the 2020. So the 2020 actually allows you to have income and get the full credit up to $200,000 for anybody filing head of household, single, or married filing separate, or if you're married, $400,000. So you could have a $400,000 income between a married couple and still get the full child tax credit. And it's still going to be that way now. It's still going to be that way now. So if you're making $399,999, you're still going to get that $2,000 per child credit. Now with the 2021, it's sort of stacked on top. It's got an extra amount for people in a certain income level. So it's moving the child tax credit up to $3,000 per child if your child is age 6 to 17. Notice that 17 is now in there. So they're actually extending that past 16. So now those 17-year-old children who typically get bounced out and you don't get the credit, they're getting the credit now under this new system. If the income levels hold, and we'll talk about that in a second. Now, if they're under 6 years old, it's $3,600 per child. So under 6, so 5 or under, you're going to get $3,600 per child. If they're 6 to 17, you get $3,000. And here's the other thing. As I said, for the way the 2020 and earlier child tax credit worked, you didn't get that until you filed your taxes. This one, they're going to put it in there where you could potentially start getting half of the credit from July until December. So starting in July, if you qualify for the new child tax credit, the 2021 child tax credit, you're going to actually start getting payments for that if they have your bank information. You're going to get payments for that starting in July through 2021, and it's going to be half. So if your child's 6 to 17, you're going to get $1,500 between July and December. If your child's 5 or under, you're going to get half the $3,600 or $1,800 from July through December. Okay, if you don't get it during the year, let's say they didn't have your bank information, or for whatever reason, let's say your income is going to be too high, and I'll explain the income for the new credit in a second. If your income's too high, but then this year it's lower, you'll get it when you file your tax return. So there's always, with all these new stimulus plans, there's always kind of a caveat that if you don't get it now, you'll get it when you file your return. And that's the same for this. Okay, so as I said, we got the 2020 and earlier child tax credit. On top of that, it's going to be the 2021. Why am I saying it that way? Well, because the new child tax credit has an income limit. So if you're married filing joint, it's $150,000. If you're head of household, so that means basically single with children in the household, it's $112,500. And if you're just, you're going to be head of household for the most part. You're not going to be single. But if it was single, it would be $75,000. Okay, so that's to get the higher amount. That's the stack on. So what if you're married and you make $160,000 and you're phased out? Well, you still get the child tax credit, but it's under the old rules. So you'll still get that $2,000 per child, still from age 0 to 16. And you have up until $400,000 if you're married filing joint, or $200,000 for all other statuses, filing statuses. So if you're $400K or under for married filing joint, or $200K or under for head of household or single, or married filing separate, you're still going to get the $2,000. If you go down even further and you're below $150 for married folks, or $112,500 for head of household, you get the expanded amount. All right. What income do you use for it? Well, it's going to be your 2020 modified adjusted gross income. Unless you haven't filed yet, then you're going to look at 2019. Okay. Now, the one thing about all of this, with the child tax credit, it's a little bit different than the stimulus. The stimulus payments, starting with the first one, second one, and this third one, if you get the stimulus, but you don't technically qualify for the stimulus, that $1,400 check. Let's say, for instance, in 2019 and 2020, your income was pretty low and you qualified for the stimulus check. But 2021, you had a banner year, and you wouldn't qualify for that $1,400 based on your 2021 income. Well, the nice thing is you're making out here, because the IRS is not going to claw that back. So the stimulus payment will not be clawed back. Now, the child tax credit, that will be clawed back. So again, take that same situation, 2019, 2020, your income qualifies for the new 2021 child tax credit. You start getting it in July through December. You're getting this money. You're loving life. But then 2021, your income was really high, above that 150 amount. Now all of a sudden, you're getting that pulled back. They're taking it back. Okay. All right. So again, the child tax credit, as we mentioned already, under age 18. So they bumped it up. So now 17-year-olds qualify. So that's good. I think that's fair. The full amount can be a refundable credit for 2021. What's refundable credit mean? Well, it means even if you don't have any tax liability, say you file your tax return, you've got unemployment, that's not taxed. You've got your big standard deduction that reduces other taxable income. So you don't have any tax liability. You've got no tax liability. You owe the government nothing. Well, this child tax credit, it'll kick in, and you'll actually get money. You'll get it refunded back to you. So you could get this $3,000 or $3,600 per child credit, even if you don't owe any taxes. Usually credits, what you do is if you have your tax bill, you owe the government $10,000, you're getting a $3,000 child tax credit. They subtract that out, you owe $7,000. This one, you could owe $0. And if you're getting child tax credit, they're going to send that to you. So you can actually come out ahead big time on this thing. Again, half the credit may be paid in advance beginning this July. Okay. And again, this can be clawed back, unlike the stimulus payments. The other thing that was changed pretty radically here with this tax law, or not tax law, the spending bill, is the child independent care credit. So the government's always provided a credit for people to try to help them out if you're paying for daycare. And if you look kind of at the far right here on this screen, this is what it used to be. I'm sorry, the top two lines on the screen. This is what it used to look like for 2020. If you had one child, you could basically use $3,000 of eligible expenses, and the maximum that they would give you is 35%. So $1,050 would be your maximum credit. And that started to be phased out as your income went up. But it did get to the point where no matter how much money you were making, you got 20% of that, or up to $600. So it was one of those, no matter how much you made, you're going to get something, but it was a phased out from 35% to 20%. And if you had two or more qualifying children, it was $6,000. It wasn't $3,000 per child. It was $6,000 for two or more qualifying children. So you get 10 kids, you still are capped at that $6,000. Same with the 35% maximum amount, so $2,100. Well, the new law for 2021, you can see really way better. Now we're talking about the maximum eligible expenses go up for one child from $3,000 to $8,000, and for two or more children it goes from $6,000 to $16,000. So you can basically use a lot more of these expenses that you're paying. And then the percentage that they're going to credit you went from 35% up to 50%. So you're getting even more. So you have more eligible expenses and a higher amount that is eligible for the credit. So the credit's going to jump up to $4,000 for one child or $8,000 for two or more children. So that's almost four times what it was before. So if you have children in daycare, this is a huge win for you. Okay. Now we talked about unemployment briefly. Again, $10,200 per person is going to be tax-free, but there is a caveat here. Your adjusted gross income must be under $150,000 for all filing statuses. Okay, so if you, for whatever reason, you're a high-paid executive and you got laid off and you collected unemployment, and then you got another job, or just your income as being a high-paid executive was above 150, you're going to pay tax on this, and it's a total cliff threshold. So $1 over 150,000, you're gone, right? That's it. We'll talk about this in a second, but you notice 150. 125, those two figures are coming up quite a bit. So as you start to look for income planning for this year, you might want to be thinking strongly about trying to keep yourself at 150 or 125 and below. All right, because it opens you up to a lot of these credits and tax possibilities. Here again, we've got another little generous benefit. So the health insurance subsidy, the Obamacare subsidy, what you can look at here, if you go to the far right, this is what was in place before. So this was 2020 and before. Essentially, how the way the Obamacare subsidy works is they look at your adjusted gross income and they compare it to the poverty line. And the poverty line depends on how many people are in a household, but the poverty line for a single person with no children is, I believe it's like $17,000. A family of four, the poverty line is $27,000. So if you have that's sort of what they're talking about when they talk about household income as percent of the poverty line. So you could have up to 133% of the poverty line. And if you go all the way to the right, the regular rates, what the government was saying is they only expected you to pay 2% of your income towards health insurance premiums. Anything above that, the government would pay. And this is for the second highest cost silver plan on the Obamacare subsidy platform. So basically, up to 133, they expect you to pay 2%. And you can see it goes to 3% up to 150, 4% to 200, 250. They expect you to pay, between 6 and 8. And then from 250 to 300, they expect you to pay 9.5%. 300 to 400% of the poverty line, 9.5%. And if 400% or higher, they expected you to pay the entire insurance premium. That's how it worked. Well, for 2021 and 2022, they enhanced this. You can see that kind of on the left, 2 columns. So up to 133%, they don't expect you to pay anything for your health insurance. It's going to be fully subsidized, every penny of it, not even that 2%. Even for somebody who's making up to 150% of the poverty line, they're not expecting you to pay any premium whatsoever. The government's going to pay that for you. From 150 to 200, the max you'll be paying would be, it's phased out obviously from 0% at 150 to 2% at 200% of the poverty line. So the max you'd be paying would be 2%, and then 2 to 4 for 200 to 250, so on and so forth. Now, what's interesting here, if you look at the very bottom, on the old plan, the government expected you to pay the full premium if your adjusted gross income was 400% of the poverty line. Now they're not doing that. Even if you're above 400% of the poverty line, they're only going to make you pay 8.5% of your income towards the premiums. Anything above that will be covered by Uncle Sam. So this is a very, very big change. And here again, this is something that you might need to make some plans for. It could be a little late for 2021, but it might be something to think about for 2022. In order to qualify for these subsidies, you have to get your plan through the Obamacare platform. You can't just call Blue Cross, Blue Shield, or anything like that directly. It's got to go through whatever your state mandates to get a subsidy, to be on the Obamacare. So some states, they just have their own platform. Some have you go into a federal platform. Whatever the state tells you to do, you have to go through that platform to get this subsidy. Okay? Some other little things we'll hit on. They've expanded the Families First Coronavirus Response Act paid leave credit. This is if you're a small business owner and you've got people, the way it was working, right? Just if you were close to somebody who tested positive, you're supposed to quarantine for 10 days, get tested, yada, yada. Most of the time, these people end up not testing positive, but they were out for 10 days. So you lost an employee for days, possibly. So what they're doing is they had a tax credit for the employers who allowed to voluntarily provide sick and expanded leave. So if you paid for them to be on leave due to COVID, there's a credit. This bill basically extended that. And the bill also added in there, you could now do it just for vaccination. So if you wanted to give somebody a day off to go get vaccinated, you're eligible for this credit. Some other little things, the PPP extension deadline has been moved. It was March 31st. I'm sorry, it hasn't officially been moved yet. The House passed it to extend it to May 31st. But the Senate has not passed that yet. So right now it's still March 31st, but it's probably going to be extended to May 31st. So if you're a small business owner and you're going to need a PPP loan, you'll probably have a couple more months to do that. It did not eliminate the required minimum distributions on your IRA. Now, last year in 2020, the government basically got rid of all RMDs for all IRAs. They have not done that. They are going to require that you take your RMD for this year. The other thing that didn't get put in there was no minimum wage hike. That was talked for a little bit, but that didn't get through. The other thing is no changes to the cost of living adjustment for retirement plan contributions. There was talk that they were going to basically cap it. Every year it basically goes up by the rate of inflation, so you can continue to add more to your IRAs and 401ks. Well, there was talk they were just going to cap it and not allow that to continue up past a certain point. That did not get passed, so it's going to continue to go up by whatever the cost of living adjustment is. So that's basically the quick information on the new tax bill. Not tax bill. I don't know if it's a spending bill, tax bill, whatever it is. I'm at the point I don't even know. It's just They keep passing these things so darn fast. And so this is kind of the key things that are coming out of it. A lot of the questions we're getting from people on it, we try to address that. Again, this is not financial advice. We make no representation that the stuff is correct. We do the best we can. We dug into the code. Hopefully we were right. But that's essentially, that's the story. So let me jump back in, see if there's any questions. Doesn't look like there is. I'll be amazed if any of you are still awake. This stuff is pretty dry, but it can be pretty important. You can see if you're, especially a working family, you're using daycare, something along those lines, not too, you get extended child tax credit. You're going to get the daycare credit expanded. Unemployment's going to be exempt. So not too bad for a lot of folks. So anyway, yeah, Rob says he's awake. Might have a snooze button going or something. But that's basically it. I'm not going to get into, whether I think it's a good plan or not. It's just crazy. The total cost, the 1.9 trillion, essentially is a $5,000 cost to every American here, but you're getting $1,400. So I don't know. Not a very good return on my money. I'd rather just not do the bill at all and keep our money. So anyway, I hope you guys have a great weekend, and we'll be back in a couple of weeks to go over topics. Please, if you have any questions at all, things that you're perplexed on, anything, I like to know those because that's what I base these on. They're essentially the questions I'm seeing from people or timely topics like the tax bill. So have a great weekend, everybody.